What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kouami, Got Mortgages. We got a jam-packed agenda for this week. Super excited to kind of go over everything that we've been going through with the market over the last few weeks. I actually was unable to jump on last week. Got a little tied up. Been a little busy, squeezing things in for the end of the month. But I want to go over with us exactly what happened last week in reference to the Fed meeting. What were the results? How's the market reacting to this and all that fun stuff? Okay. So we're going to dive right into it, getting exactly a good feedback in regards to the market, get an understanding specifically as to what are the factors that are currently affecting interest rates. And what you guys will actually see is the market has been pretty flat really since last week when we had the Fed meeting. When they did come out, they did confirm there were going to be 3 cuts. We went ahead and saw a really sharp decline for rates, right? And then now we've kind of been really plateauing at that, kind of sitting at best. We were moving really in the opposite direction at the start of the week, or the start of the month, I should say. We dipped, then we went up, and now we're going down, and now we're likely going to shift a little bit higher until the anticipation of the PCE report later this week, right? So again, what did the Fed go ahead and do? The Fed went ahead and confirmed that they are going to be looking to cut interest rates 3 times this year. They didn't say specifically when it was going to start, but they did go ahead and confirm that there were going to be 3 potential cuts coming into 2024, right? Remember, there was 11 hikes, which is the highest federal funds rate that it's been in ever, right? Since March of 2022. So with that being said, the federal funds rate right now is at a 5.25 to 5.5. They're expecting, again, potentially a 75 basis point cut, which should bring the federal funds rate to 5.5, 5.75, which should simultaneously, get interest rates to come in even lower as we want, right? So again, the Fed's dot plot was another thing. We saw 15 of the last 19 members, again, still expect the basis points cut of 50 to 100. Existing home sales. So now you're kind of seeing a little bit of a shift, right? We're now seeing existing home sales jumped up by 9.5%. So existing home sales, which is essentially new home sales, have jumped up 9.5%. It is now maturing at a 4.38 annualized pace, which is the highest point that it's been according to NAR, right? Now, again, the report kind of will dive into very heavily in regards to the current homes and the people that were shopping from December and January. But it's certainly the trend of what we were looking for, right? Now, again, inventory obviously increased by almost 6% in January, which is awesome, right? Well, obviously, the most common thing that we need is that the additional housing supply is something that's critical, right? We need that to obviously play a factor in regards to making rates go up. We're starting to see home builders at the same. So home builder sentiment also increased to just over 51. Again, it's marked out of a 50 basis points. So we're seeing obviously builders feel a little bit more positive. Anytime that it's over 50 shows that it's a little bit more on a positive trend, and it's good, right? Now, again, we're going to start seeing a little bit of what's previously sold in regards to the homes and see that impact specifically when it comes to that. Now, we have, in regards to February starts, you're starting to see an uptick really of permits and starts. Construction looks like is a little bit of a decline, and then completions almost 20% month over month. That's huge, right? That means that a lot of the different permits and starts that we're beginning have obviously started to trickle in, with almost 1.73 million in brand new homes. That is up 35%, right? And it's, again, the biggest push we're seeing is the single family homes that are starting to play a massive impact. So again, the bottom line for that is that we're seeing obviously single family homes start to see an uptick, which is a very, very good thing, which is going to allow the market simultaneously to put that positive feedback of what we're looking for and then take it from there. So now we saw a little bit of initial jobless claims last week, pretty much stayed flat. No really massive changes in regards to losses of jobs or increases of jobs. And that we kind of expected truly over the last couple of weeks. Usually tends to stay a little bit more flat when we talk about the market and we talk about job losses and stuff, right? So again, what do we have going on this week? This is generally the week where we will start getting some updated data in regards to new and pending home sales that was released today and Thursday, and then the appreciation data for January. So obviously we know that 2023, we wrapped up appreciation at basically just about 6% of an increase in value. We're hoping to see a little bit of a positive trend at the same time, which I'm more than confident that we will, because all of our offers that we're seeing are multiple offers with bid over asking for every single home, right? And then we're going to get on Thursday updated GDP report. This should be a massive market mover too. Kind of see how that impacts it, along with just initial jobless claims for Friday. Okay. So again, that PCE report that is coming out on Friday is going to really make a good movement in regards to the market or on the vice versa side. So we'll kind of keep an eye on that stuff. So any questions that you guys have, please feel free to give me a call, and I'll talk to you guys soon.